Hi guys. Today we will analyze Choice Hotels International stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. Both the long and short-term trends are negative. It is better to avoid buying stocks with negative trends. Strong support level is around $112. Next strong support levels are around $98 and $86. Strong resistance level is around $123. Next strong resistance levels are around $136 and $153. In the last month the stock has been trading between $111.20 and $123 range. It is currently trading near the lows of this range. The stock has an average volume of 0.4 million. This is not a very liquid stock. The stock has been in a downward trend since January 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 8% per year, for last 5 years. We see that the average profit margin of the stock has been around 18% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 102% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Choice Hotels Company: bad, average, and good. First scenario. Choice Hotels will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 5%. Future profit margin would be a low, 18%. Future free cash flow to net income rate would be a low, 60%. In this case, the fair value of the stock today would be $37. Second scenario. Choice Hotels will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 6%. Future profit margin would be average, 20%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $55. Third scenario. Choice Hotels will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 7%. Future profit margin would be high, 22%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $78. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 6.3. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Choice Hotels, analysts forecast growth rate around 8% per year in next 5 years, and future P/E around 21. Again, I will use 3 different scenarios for Choice Hotels Company: bad, average, and good. First scenario. Choice Hotels will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 5%. Future P/E would be a low, 13. In this case, the fair value of the stock today would be $54. Second scenario. Choice Hotels will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future PE would be average, 15. In this case, the fair value of the stock today would be $68. Third scenario. Choice Hotels will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 7%. Future PE would be high, 17. In this case, the fair value of the stock today would be $84. As you can see, today the stock is overvalued, $107, even if we expect the company's high performance in future. While the company has a good profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 6 to 8% yearly. Based on that, the stock looks overpriced at the moment. The stock has been in a downward trend since January 2022, and it can go lower before it recovers. I may consider buying the stock when the stock drops below $80. Company strengths. Choice Hotels International is an American multinational hospitality company. The company, which is one of the largest hotel chains in the world, owns several hotel brands ranging from upscale to economy, like Clarion, Quality Inn, Comfort Inn, Sleep Inn and other. Choice Hotels franchises more than 7,100 hotels in more than 40 countries. Choice Hotels' recent revenue per available room has surpassed pre-pandemic levels, and this gives management the confidence to raise its full-year guidance. Choice completed the acquisition of Radisson Hotel Group in August 2022. The Radisson brand generates revenue above the consolidated average, and expands Choice's loyalty membership presence, which should support its brand intangible asset. With the acquisition of Radisson, Choice's loyalty membership will be more than 60 million. The company provides industry-leading services and a resilient business model. With essentially all rooms franchised, Choice has an attractive recurring fee business model with high returns on invested capital. Choice noted that upcoming infrastructure development in the U.S. should be a tailwind for demand the next few years. The completion of renovation and heavy termination activity at the Comfort brand in 2019 offers the opportunity for unit growth acceleration starting in 2023. The company is also focused on growing its exposure to the extended stay segment. The company's return on assets of 17% and profit margin of 29% are amongst the best returns in the industry. Risks. Independent hotels and home and vacation rentals present an increasing competitive threat. Airbnb continues to be an industry-wide threat. Choice's U.S. hotels represent around 80% of total rooms, exposing the company to an economic downturn in the U.S. to a greater extent than competitors. The travel industry is cyclical. In a downturn, which can occur from airborne illnesses like coronavirus, terror attacks, or economic slowdown, consumers and businesses look to cut back on expenses, like travel. Overbuilding can lead to lower occupancy and room rates, which would then affect growth and profitability. The combination of old and new cybersecurity threats makes the hotel industry extremely vulnerable to attacks from both outside and inside. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 6 to 8% on average per year. The earnings per share is expected to grow by 8 to 10% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.